Hello and welcome. In this video, we will see how trading in stocks is different from trading in futures. Alright? Now, here on the left side, I will list out the features of stocks, and on the right side, I will list out the features of futures. Alright? Now, stocks. You can buy any number of stocks. You can buy one stock, you can buy 23 stocks, you can buy 433 stocks, or any number of stocks. Okay? Whereas, if you come to futures, you have to buy futures in lots. Now, each lot contains certain number of stocks which cannot be changed. Alright? So let us say a company has a lot size of 100, meaning one lot will have 100 stocks. So you need to buy entire 100 stocks or one lot of 100 stocks. If you want 53 stocks, you cannot buy that. You can buy 100, 200, 300 or in the multiples of lots. Okay, so that is the feature of future. You have to buy them in lots or bundles. Next, you can buy or sell stocks. You can buy and you can sell. Whereas in futures too, you can buy or sell futures. Okay, you can buy or sell futures. Now, let us say you buy 10 stocks today. Next week, you can sell those stocks which you have bought or which you had bought. Next, sell orders cannot be carried forward, meaning if you sell stocks without owning them, you know that you can sell stocks without owning them, correct? So there are two types of sells. One is that you buy the stocks and then you sell the stocks. Okay? When you buy it, you have it, and you sell whatever you have. That is one type of sell. Another type of sell is you sell the stocks that you do not have, and that is this. Okay, so you can do that, you have a provision to do that. But if you sell stocks without buying them, then it has to be intraday. So you cannot sell stocks today and carry it forward for the next day. So if you sell stocks in the morning after the market opens, then you have to buy them back before the market closes. Okay, so sell orders here in stocks cannot be carried forward. Whereas in futures, you can carry sell orders. Okay, so here too, you have two types of sells. One is you buy a future and then you sell the one that you have bought. Okay, for example, let us say I have bought one lot of Infosys stocks, and then after 2 days I am selling the lot that I had bought 2 days ago. That is one type of sell. Another type of sell is without buying the future. Without buying the future, I can sell. Okay, without buying the futures, I can sell them, and that is the second type of order which can be carried forward here. Okay, so let us say I sell one lot of Infosys futures today, and I can hold it till it expires. Okay, I can carry it forward till it expires. Okay, so that is one difference between stocks and futures. Next, stocks are real and is used to create wealth. So stocks are real, meaning you can see them in your demat account. they are reflected in your demat account. Okay, and generally it is used to create wealth, meaning it is for long time investment. Okay, you buy the stocks and you wait 5 years, 10 years, 15 years, and there are people who had bought stocks before 20 years ago, and then still they have it right now. Okay, so that is also there. So stocks are for long term investment, whereas futures are for short term trading. Okay, so futures are not real, they're just promises and they have an expiry. Okay, so 1 month expiry, 2 month expiry, 3 month expiry, whereas here the stocks do not have an expiry date. So here you can buy futures, but you have to sell them before expiry. Here you can buy stocks and keep them for a very long time. Alright. Next, full payment is required to buy stocks. If you want to buy 100 stocks of a company, then you need to pay the money entirely. Okay, full payment is required to buy stocks. Whereas in futures, you only need margin money. You do not have to pay for the entire lot. So only margin is enough to buy futures. Okay. Next, you cannot buy stocks of index. Now what is an index? Nifty 50 is an index. Sensex is an index. Nasdaq is an index. Okay. S&P 500 is an index. So these indexes or indices cannot be bought or sold here. Of course, we have exchange traded funds where you can do that, but generally speaking, you cannot buy stocks of index. Okay. Whereas in futures, you can buy futures of indices. You can buy future of Bank Nifty, you can buy future of Nifty, of Nasdaq, and so on. Okay, so that is one more difference between stocks and futures. All right. Dividend, bonus shares, stock splits, voting rights are features of stocks. So if you have stocks of a particular company, then you are entitled for all these. Whereas if you buy the future of the very same company, then you are not entitled for any of these. Okay, so dividend, bonus shares, stock splits, voting rights. Now what are these? I have already explained it in a video which is in the playlist of stock market basics for beginners. You can go and check it out on my channel if you want to. If you know already, then these are the features of stocks and not futures. Okay, so these are the differences or features of stocks and futures. Okay, now let us see the return on investment between stocks and futures. If you trade in stocks, if you trade in futures, what is the return on investment? So let us take an example. All right, so on the left side is for stock trading, on the right side future trading. Now let us say that I decide to buy 100 stocks of Eicher Motor. Okay, I decide to buy 100 stocks of Eicher Motor. And let us say that you decide to buy one lot of Eicher Motor April futures. One lot of Eicher Motor contains 100 stocks. Let us say, just for an example. So I decide to trade in stocks and you decide to trade in futures. Okay. Now the current market price is 100 rupees. That means if you want to buy Eicher Motor now on the stock market, then you need to pay 100 rupees per share. Okay. So this is the current market price. So in reality it is around 3000 rupees, but I have taken 100 rupees to keep the calculation simple. Alright. So if you are from a different company, you can use dollar or yen or whatever the currency is. Okay. Now, here price of the stock is rupees 105. You know that futures are priced a little bit higher than stocks. So here it is 100 and here it is 105 rupees. So if I want to buy 100 stocks, then I need 10,000 rupees in my account. So 100 into 100 is 10,000 rupees, which must be in my account to buy 100 stocks. Okay. So here if you want to buy stocks, there is no margin. You need to pay entirely to buy stocks. Okay. Full payment is required to buy stocks. Now when we come to this, theoretical capital required to buy one lot is 10,500. Okay. In reality, you need this much money. So 100 into 105 rupees is 10,500 rupees. But here, when you are trading in future, when you want to buy a lot, you do not have to pay entire money. So here, generally the margin will be between 20 to 30%. And let us say for this example, margin required is 20%. So you only need 20% of this money to buy one lot of Eicher Motor futures. Okay. So 20% of 10,500 is 2,100 and this is enough to buy the stocks or I can say future of Eicher Motor, one lot. Okay, one lot. Now let us say that price of the stock rises to 130 rupees in 1 month. So you buy it now and in 1 month the price rises to 130 rupees. Same goes here too. So the price rises to 135 rupees. So from 100 it has gone up to 130. From 105 it has gone up to 135. Now let us see how much do we get when we sell the stocks and futures. Okay. So let us say that I sold the stocks at rupees 130. And let us say that you sold the futures at 135. So 130 is current market price, 135 is current market price. Now let us calculate our profits. Okay. My profit is 30 into 100, which is 3,000 rupees. How is this 30? This is current market price. This is the current market price. And this is the price at the time of buying the stocks. So 130 minus 30 is 30. So the price has gone up by 30 rupees. So 30 into number of stocks. So 30 into number of stocks is 3,000 rupees. Okay. This is my profit. And your profit is 30 into 100. How is it 30? 135 is current market price and the price at the time of buying is 105. So 135 minus 105 is 30 into lot size, which has 100 stocks. One lot has 100 stocks, correct? So 30 into 100, which is 3,000 rupees. So we both have earned 3,000 rupees as profit. Okay. But now let us see the return on investment. My return on investment is 30%. This is how much I had invested because no margin, I need to pay entire amount, and this is how much I got back as profit. So 3,000 divided by 10,000, 30%. This is my return on investment. Let us see yours. Your return on investment is 142% because this is how much you had invested, 2,100 rupees. Even though this was required, only a margin is enough in future trading, and this is what you had invested and this is what you got back as profit. So 3,000 by 2,100 is 142%. So you can see that your return on investment is substantially high than mine. Okay, higher than mine. Alright. So this is an advantage of future trading, where the investment is less and the returns are more. Alright. Now let us come to the reality. This is only when the price moves in your favor. Okay, so we have taken consideration, we have considered this, but this is only when the price moves in your favor. You had bought one lot of Eicher motor at less price and you sold it at high price. So meaning the price moved in your favor. But if it had gone against your prediction, then the loss would also have been substantially high. Okay, so the profit will be high, the loss will also be high in future trading. Okay, the profit will be high if the price moves in your favor, and the loss will be high if it moves against your prediction. All right, so always be careful about futures trading. Okay, so I hope this is clear, the difference between stock trading and future trading. I'll see you in the next video. Till then, take care and thank you for watching.